Well, today is Wednesday, the second day of January 2013. This is a silver gold chart video looking at gold, silver, then the ratio. So let's get this started. Daily chart for gold. You got this high lower than this high. You got this low lower than this previous low. And even in just the last few weeks, you got this pattern here, which has again a lower highs, lower lows. And I guess it has to get above this high here to break that pattern, which is probably not going to happen. I guess higher lows is what's important. And then if it makes higher lows, of course, boom, then it can very easily later on take out the lower high problem. But that's the situation right now, up to this significant level, an area that, of course, was big support. And now the resistance test is underway. Let's move this on to the weekly chart. And the weekly chart, its pattern is, quite frankly, sideways, clear break above here will break that, or a clear break down below there. Anything else which is thus staying in the range keeps it in the range, being pretty close to the middle, above average 60-ish%. It's not going to break it any time soon. Okay, so we move this on to a silver, a daily chart, very similar, of course, to gold. You got this high and this low situation as well. Therefore, it's got to get above here to break the pattern of lower highs, and I don't see that happening on this leg anyway. Therefore, a lower high should be inevitable. Again, just like gold, big Fibonacci level that was not support here. Will it become that of resistance, successfully making patterns of, or successfully making higher lows? All obviously increases the chances that it breaks it down. But when you are in a bear market, you get your rally and things do happen to go back to its previous low, you pretty much got to expect there's a decent chance it's going to even take that out, if, of course, a pattern like this would manage to bring itself into existence. Silver chart. And within this, same thing as gold. You got the sideways consolidation. You're pretty much, again, barely above the average part or halfway part of it. So maybe, again, 65% within the range of 26 and 35. And again, you got this pattern here of these lower highs and lower lows. And when I look at the previous ones, and I've talked about this before, these are what the previous highs and lows were. So here we are seeing that these lows, if of course they hold, would be much significantly higher than that. That would be a bullish sign, but that's only if, of course, it can get some volume or some momentum up towards the 34, 35 range. As I mentioned, you come down below here and you start to go below here. Well, now you're going to have yet another test of this lower area, and of course, that could mean continued range movements. It could mean a final breakdown below, and maybe it would be the bottom, but then finding or calling these bottoms in spots like that would be almost impossible, unless, of course, you're in the know. Let's take a look at the gold to silver ratio, longest term from 19. Nope, that's not the one. We'll get to that in a second. The one from 1968. So this is the old historic ratio, pretty much right in there. So it's the last two times it's tested it here and here. Got up to this high and two different tests of this support level. Third one, of course, kind of failed. Now we don't know what the failed move is going to be because it's broken well above it. So if this is a failed move here, you can expect this, well, who knows, but to go fairly high. And if this is a failed move, you should at least have a retest of this level, which really never got tested before, and possibly even moves down towards the historic levels. And we'll move this on to, and of course, this is so long term, 114 days is like a half a year per candle. Anyway, let's move this on now to that 310-hour chart, which is going back to 2008. So significant high, significant low, pretty much three tests of this level, and it still hasn't tested this level on each one of these resistance tests. Therefore, any move, pretty much move, but definitely break to this level is really going to show good possibilities that it may want to test above here, which of course would most likely be bearish for gold and silver. Still, as long as it's in this range of 46 and 59, which it is, it's just a bunch of nonsense. So right now this chart is nonsense. And the final one, which would be the 60-hour chart. Here we have it. This is a situation where you take this low, this high, which found no support here, decent support for a while, then it rallied up to this level, back here again. So it needs a clear break above this range. We don't see that yet, but it possibly may do that. And of course, if I see this thing move down to here, I'm going to expect another test down towards this level, showing that this might be a failed breakout. Okay, so finally, I'm going to show this. This is the directory for the stuff that you'll see on the folder I put down below. Each one of these has the charts that I have. So these are the charts that I used today. That's a random day. There's only one chart on the 17th, on the 7th. These were the charts. You also got all the data is pretty much up to date. So we got even gold hourly up to 1600 for today, and all the data up to 2012. Gold monthly, every price for gold and silver and the ratio since 1968, going up to the end of last year, which is just a couple days ago now. So there's 1968. You got gold price, silver price ratio, and this thing will go all the way, of course, to right now December 31st. I won't update this probably for a few weeks, months actually. It's not, this one doesn't get updated too much. Then you got silver hourly, same thing. 2012 is completed, 2013 up to 1600 hours as of now. And thank you for tuning in, and have yourself a great day. Bye bye.